This meeting is being recorded.
Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the man from Wall Street, Taylor from Life Goal Investments. How you doing, buddy?
Here we are. I'm doing great. Thanks so much for having me, as always.
So Friday did not go the way you were expecting. So let's just appreciate that, acknowledge that, and then we'll talk about Wednesday, because Wednesday is a huge day.
It is. It is. Yeah, no doubt. And you had alluded to this, and I didn't agree. I didn't disagree to this, that I thought that Friday was the most important economic data that we had seen this year.
Absolutely.
And admittedly, I was wrong on it. I thought inflation was going to come in light. I think that was actually consensus. I had been calling for it a little bit earlier than consensus, admittedly. And we being Life Goal, have been proven that inflation and the economy has been proven that inflation is much, much more persistent than what everybody had perceived it to be. Or not everybody. You were spot on, admittedly. You hit the nail on the head, right?
Yeah.
You said, listen, the three big pieces. And
I called it early. I called the number. Yeah. So, yeah. And again, as I said, it alluded to on my daily show, Wall Street seemed to be set up for the peak inflation narrative, smashed them. This Friday was Thursday was somebody got the whisper number Thursday evening. Somebody got it, because you saw weakness Thursday into the close. Then Friday smash, Monday smash, crypto smashed on the weekend. It's just all bad. Wall Street in general, Kathy Wood especially, July pivot, how funny, was wrong-footed. But now let's talk about Wednesday, because one thing that you brought to me that's been validated by other Wall Street guys I know is you have often said, and I think you've said on this channel, the Fed is chasing the 2-year, right? The Fed is behind, but that's kind of the lynch mark. The 2 years exploded. We actually got a small yield curve inversion this morning where the 2 was above the 10 for a couple of minutes.
Yep.
Can the Fed deliver on the 50 that they've promised? Because again, remember, Powell said, dumbass, he said this, we have taken 75 off the table.
Yeah, he backed himself into that corner. Yep.
Dumb.
There's no way they can do it. That the market will explode. Now that's hyperbole, but there's no way they can bump 75, because then he loses faith. He's got to save face as to what he thought was going to play out and now what is playing out. And the market's now obviously looking for a 50 basis point move and all knowing that that's what's going to come. If it didn't come that way, then obviously it would be wild. But what you will see a move in, and I think you'll see a market move in, is the dot plots. So the dot plots are where each Fed chairperson of each of the regional banks forecasts where they see rates going in the future. And what they will show is that now, if the market's right, because I looked at them right before this call, that now it's almost a foregone conclusion that we'll get another 50 basis points in September. And that's where I was wrong. I thought that the Fed was going to start to crack things sooner and that we wouldn't be able to get to that 50 basis point move in September. But now it looks like it'll be 50 this meeting in June, in a couple of days here, 50 in July, 50 in September, and then 25 and 25 at the subsequent 2 meetings after that to get us to the end of the year. And that's what the market's saying. And I don't like to say this, but it's looking like that's the direction. Again, my where I was wrong is a couple fold. So we were wrong in the fact that we thought oil prices would come down. And that obviously is meaningfully wrong. And I don't think that we thought they were going to come off and you were going to see $80 a barrel, but we thought more likely you'd be at $105 a barrel right now than 120 plus. Mm-hmm. And so that's kind of where we sat. I do think that inflation is always looking in the rears. And I think going forward, some of the forward economic indicators are starting to weaken in a big way. So some of the things that are a little bit more potentially discretionary, maybe elastic is a better way of putting it, like lumber prices. Lumber prices are in free fall. And that's not an exaggeration when I say they're in free fall. They're down from 1,300 plus at the beginning of the year till the mid fives right now. Copper prices are rolling over. A lot of the metals that go into the industrial build outs are rolling over. So we'll see where things go. But to your point, and this is the point you were making the whole time, you don't necessarily disagree with that direction in general. You were just saying, listen, it's not coming that soon. And you were right.
It was timing. Yeah. Yeah. So let's talk about Wednesday. Cause I do see, after Friday, Wednesday became the day that could be market moving. So I think I have an opinion on what I think Powell will do. And I have an opinion on what I think he should do. So they're different, right?
Yeah.
I think Powell has made it very clear that he wants to painfully articulate to the market what is coming and then deliver on that promise. The dumbass painted himself into a quarter by taking 75 off the table.
Mhm.
I'm going to guess he regrets that decision to say that, because he has to deliver 50, right?
Yeah.
Or,
Yep.
you know, and then I actually am now calling for 50, 50, 50, 50. I'm calling 4 meetings of 50,
So
right?
you're going 200 bips.
In the next 4 meetings. Yeah. I don't, and
Yep.
frankly, I think they're going to do the 5th one too, because I think they're just so far behind.
Yeah. Yeah.
But what I think he should do is, I've said this on my daily show a couple of times, I think he needs to walk up to Mr. Market and kick him in the nuts.
Yep.
I think he needs
Yeah,
to go 100 basis points, or even I think 75 does it. I think anything that the market doesn't expect Wednesday causes a market capitulation, a washout, a how can you do this to us? You lied to us, nonsense. We're set up the wrong way, and now we have liquidations and margin calls. And good.
Yep.
Crush them.
It's good. Yeah. And so like in when you look at the way the markets reacted this year, the sell-off has been orderly.
Correct.
Like it is played out in a stair step case downward. Now we've beaten around up and down, and there's been news that kind of rocked the boat a little bit. But if the Fed took a step back and said, we're going to get to here and we're going to say this is where we're going, and the market's going to do this, they would go, that's a win. That's a win. Now, granted, they might be slow and they might need to pick up that pace, but this has been an orderly sell-off.
No,
and
agreed.
what we've seen, which is interesting, and the scary part moving forward, is that what we've seen is that multiples have come in. So the price per dollar of earnings that a company produces have come in, and they've come in. This weekend's data showed, this is out of Barron's, from 21 times at the beginning of this year to 16 times.
Correct.
What has not changed, to be very clear, is earnings have not changed, and earnings estimates have not changed. If anything, this is shocking, they've gone up marginally.
Correct.
And so this is the crazy thing, is that the analysts on Wall Street are saying that earnings are going to continue to move up. And it's just a head scratcher. I don't see where the data comes from that alludes to the fact that the economy is going to continue to grow from where we're at this point in time.
Yeah, Wall Street's I'll just tell you right now, Wall Street's wrong again. As wrong as they were Friday, they're wrong again. Goldman finally put out a piece that I could get behind, right? They talked about earnings, they did a whole multiple layered thing. They basically said earnings can come in from 251, which is the current number for the S&P 500, to 200. And then the multiple could go from 16 to 14. And then that would get us to 3150. I'm like, finally, somebody on Wall Street has some balls to say, just Wall Street leans bullish.
Yeah,
it does.
And for context, that's down 19% from where we're at right now.
Well, as of this morning.
Yeah. So now down 16, right?
Yeah.
So, and then Morgan Stanley on the other side, Mike Wilson, another guy who I respect, says down 13%. Again, that was prior to the open this morning. But one of the things, oh boy, lost my train of thought. So anyway, let's
3150, I think, is it, because again, I'm telling my audience that I'm going to get back in the market. I will buy good companies that make real things, that have real profits when we get closer to the bottom. We're not there yet. I've been through these before, and everybody wants to buy the dip. You guys are buying the dip, coming the dip. This is, we haven't had capitulation. I don't know what the VIX is, if you can look it up, but the VIX last time I checked is still ordered like at 28 or something. And we haven't had that 40.
We need to see that spike above 40. Yeah. And I don't, again, there's no data to definitively say this, but it doesn't feel like retail has sold. And we've talked about this several times.
Buy the dip. So
yeah. Buy the dip. Buy the dip worked last year, but
no, the Fed put us over. And again, I just want to say it for good karma. I think Powell needs to come out and say, here's a 70. I think, 100 is what he should do. I think 75 sends the message. We're wrong. Americans are hurting. Did you see the consumer sentiment number? The worst ever. 52.
That's the thought that got away from me, by the way. That's where I was going. Because you talk about earnings estimates, right? Earnings estimates not coming down, and yet the consumer is the worst they've ever been from a mental perspective.
Worse than 74.
Back on spending?
Yeah, no. Worse than 74. Worse than 81. Worse than the .com. Worse than 9/11. Worse. Seriously, is anybody not paying attention to what the hell, Wall Street? You're wrong, man.
And so I'll say this though, Wall Street's wrong, but also Wall Street's pricing bonds right now that says we're going into recession.
No,
So
dude,
what they say and what
Yeah.
they do is two dramatically different things, because Wall Street is the one pushing around bonds right now. And what they're doing is forcing the 2-year up towards the 10. And essentially when the 2-year breaches the 10,
it
that
did
is
this morning.
and you know this, an incredibly high likelihood indicator that a recession is to come. Because essentially what that says is that the Fed is going to have to cut rates to get this thing back to normal. And obviously at some point down the line, right, if recession comes, the Fed will cut rates. Obviously, we're not anywhere near that at this point. They're still raising on the other side to beat down inflation.
Yeah. All I got to say, folks, is we wrap up episode 1. Welcome to a hard landing. This soft landing nonsense is a story, a pipe dream, a mystery. Be prepared. Get ready. Have a shopping list. Don't go early. There's no heroes going early. Taylor, where can people find you?
Yeah, follow us at Life Goal Investments. At Life Goal Investments on Instagram is probably the best place, but we're on all the platforms. Follow us on Instagram, I would say.
Thanks, buddy.